NSE, Nairobi Securities Exchange valuation hits 2.99 trillion valuation, almost 3 trillion. What does that tell you? It tells you that the Nairobi Securities Exchange, or literally where we buy shares, that particular trading platform, is actually increasing in its valuation. And can you imagine this? I bought those shares of, by the way, if you didn't know, you can actually buy the NSE shares. I bought them, they were at around 4 shilling. Right now, as we speak, they are at ups of 16 shilling. There is an increment that is actually 4 times of what I actually bought. Now, listen, this is the newspaper. That's what it says. If you can go grab this newspaper of Business Daily, and I'm not advertising them. Again, if you see them somewhere, tell them Joseph said they have a newspaper. Well, if you can get this newspaper, this is Thursday, November 6th, 2025. Literally yesterday, because I'm recording this video on 7th, if I'm not wrong. Now, what happens is that the NSE valuation nears 3 trillion milestone as shares surge. People are now escaping from the capital market, that is the bills, the bonds, the money market funds, the fixed investment funds, and what have you, and are trickling into the stock market. And can you imagine this? People are minting. Do you know what? The investors minted what we call the paper appreciation, close to, you can get this paper, close to 1 trillion. Actually, it's not even close to, it's 1 trillion. That's what we call paper appreciation. And that simply means that you will be one of those guys who are gaining something out of it. And hope you've been buying shares, and if you have not, I believe this is the time to do that. And guess what? According to the writer of this particular thing, they are predicting that by end or by the beginning of 2026, that is on January, approximately 2 or 3 months from now, we're going to have a 3 trillion valuation. And that simply tells you that the stocks in Kenya are doing great. Most of the companies are actually doing exemplary. We were here, we were discussing about the KPLC. We were here, we discussed about the NCBA and what have you. Now, listen, I know some of you may not understand. What exactly does this mean and what importance it is? It simply means that our trading platform, an equivalent of New York Stock Exchange, it is actually gaining momentum. And the good thing is that now we are having more of the local investors, meaning the Kenyans. Back then we used to have the foreigners, coming in, minting billions and trillions of money and getting out. There's nothing wrong as having the foreign investors, but now is that most of what we call the internal people, that is the Kenyans, are actually buying shares at a very high rate. Now you're seated there, you're still confused. How do you buy? How do you invest? Where do you start? And what have you? Now you're getting all the signs. And there's something I told you guys sometimes back. I told you one thing, that according to my projections, again, I might be wrong on this, but according to my projection, I can foretell, or I can foresee, that Nairobi Securities Exchange in a near or 2 years time from now, it might be a big thing. Remember, in Africa, we have we have almost every country has its own securities exchange, but in Kenya, or rather in Africa, we have like large 4: the South African one, the Egyptian one, the Nigerian one, and I think the if I'm not wrong, I think that should be Morocco, if I'm not wrong. Again, I stand corrected, but those one was the 4 biggest securities exchange that we have in those countries. Now, here is the point. One thing that you're supposed to realize or understand is that the Nairobi bourse yesterday closed, that's according to what is written there, came all the way from 2.4 trillion to 2.9 trillion. That is an increment by 500 trillion, or rather 500 billion Kenyan shilling. That is from mid-July, and I'm making this on November. Can you imagine that? That simply tells you that within a short period of time, we might actually get these shares at a very high rate, and that happens. And guess what? Gains in blue chip companies, examples are Safaricom, Equity, KCB. By the way, let me share with you here. There is a way they have actually analyzed and they have drawn a very good circle here. They have said out of this gain, 72% or 72.8% is gained by the following companies. 1, Safaricom, they had an increment of over 513.9 billion. We had the NCBA Bank with over 66.5 billion. We had the KCB over 65.6 billion. Equity Bank over 74.4 billion. And obviously the others gained 284.9 billion. You remember when I was here and I told you guys, if you ask me what shares to buy, I did tell you sometimes back, that should be the Safaricom, that should be the NCBA, that should be the East African Breweries, that should be the KCB and the Equity Bank. All these 5 companies listed here are blue chip. Probably you might be like, okay, what is a blue chip company? Well, I'm not go to the definition of the statistics and economies and what have you, but in a layman's language, blue chip companies are big companies that are movers. You know, they are these, they share quite of a big, what we call them, capital market. It's like the way you go to America, usually hear the unicorns. Examples of Apple, the Meta, and what have you. Those are unicorns, you know, big companies that has a big valuation, which, determines the movement in that market. And obviously, if that company was to be delisted, therefore that particular listing institution, regardless of which one, obviously there would be a hit. Those are blue chip companies that usually makes a very big move. This is quite of a good news if you ask me. And we had a very crazy movement when it comes to like the Kengen. Kengen, can you imagine this? Came all the way from 4 point something shillings to over 10 point something shilling. And that we're talking about in less than 6 months. Remember I was here, I talked about the KPLC shares. We came all the way from 1 shilling and 46 cents all the way to 14-ish shillings. Some people minted billions of money out of that. We also have another big change in some companies. Like Kenyari. We also have some companies changing like Umeme. You remember Umeme? So Umeme has some issues here and there. I don't know, came all the way to 20 shilling. Now we are back to kind of 8-ish or 7-ish there. But anyway, it is what it is. So in 2025, we still have a very good surge on the Nairobi Securities Exchange, or should I say on the stock market compared to the capital market. Why? Most people are preferring investing on the stock market because they are minting quite of a good returns compared. Some of these companies are actually giving over or in excess of 100%, 200%, 300% and something like that. So now, what is my message on this video? As much as I told you guys, if you're watching me for the first time, you're wondering, hey, who is this guy? I try as much as I can. I make videos as far as the investments are concerned. I usually report the financial news such as this one, giving you ideas on how and where to invest. Not because that I know everything, because hey, guess what? I'm a consumer of what you call the financial news, the economy news, so that I can be able to see where the opportunities is. I can substantiate my information by proving to you, if you grab this newspaper, you can be able to read about that news. And again, I'm not advertising them. We have no partnership with it. You can just disregard buying the newspaper. If you subscribe to Good Joseph, I always make videos as far as that is concerned. So generally, what I can tell you, according to me, I would say do not hesitate. Get into the stock market. But obviously, that is after doing your own analysis, making sure that you do your research, making sure that you understand why or what shares you're buying, making sure that you understand, hey, guess what? I'm buying these shares because I've not only listened to Good Joseph, but also I have done my own research. You've even gone to an extent of contacting your stockbroker, asking them, where can you buy? How can you buy? How does it go about? Don't just go withdraw your money, rush into the stock market, because as much as we're having these gains, for those who have been with me for quite a long time, you remember there was a time I told you Nairobi Securities Exchange had been voted as the worst performing Nairobi Securities Exchange. I think that was like less than 2 years ago. There was a time we were voted, actually last year but one, we were voted like the worst performing Nairobi Securities or the Securities Exchange in the world, not in Africa. And guess what? That was the time I had a clarion call. Guys, this is the best time to go to the stock market. This is the best time to invest. Some of you are like, oh no, it is the worst. Some of you criticized me on the comment section. Obviously, I'm not expecting all of you to love me. I'm not expecting all of you to actually agree with me. We are here to actually learn from each other. We are here to correct each other whenever I make a mistake. And we are here also, you can tell me something that I don't know. I can also tell you something that you do not know. In that manner, now we are able to grow each other to the next level. Remember what? I'm a believer, just like an iron sharpens another iron. So do we learn from each other? All right. Now, what are the requirements for you to invest on this stock market? Simple. Get yourself a stockbroker, get yourself a CDS account. And if you do not know how to go about that, my number is always on my description of this particular video. Get that call, or you can check my previous videos. Obviously, I'm not in an environment where I usually make the videos, but you can be able to go check out on my board. There is a number written there. You can grab that number, shoot me a text on my WhatsApp. Then we can negotiate and we can have a conversation about that matter. Now, anyway, I don't have much to say. I believe I have actually submitted quite enough information on that. You can go read much about what exactly has been happening on the Securities Exchange. Now what happens is that you can be able to get a lot of information here, and you can gain something, and you can also invest and gain something out of it. Anyway, I don't want to make this video too long for you. Obviously, some of you say, hey Joseph, go straight forward to the point. Hey, what's going on? Yeah, you got the information now. It is you who determine what you're gonna do with that information. All right, that is securities exchange. That is the thing for you. But now, before I even leave, I have to leave this message for you. Remember what I said at the beginning. Hey, people are running away from, or people are not running per se, but people are shying away from investing into the capital markets. And that's likes of the bills, the bonds, the money market funds, and what have you. Does it mean you should go withdraw your money? By the way, this is a very good question. People ask me this question. Hey, Joseph, we are having a lot of, we're having low returns on the, what do you call them? We are having low returns on money market funds and what have you. Now, should we go withdraw our money and invest on the stock market? No, you shouldn't do that. Okay? Why? Because all these investments are good, they are great, they are decent. The thing here is, try to do what we call diversification. Have some cash into the stock market, have the other cash into the what we call the stock market and the capital market, so that at least, you know what, as much as we're having all these gains on the securities exchange, it also comes with its fair share of challenges, because it's not a low risk investment, it's actually a high risk investment. That means that you don't just go withdraw the last coin that you have, break your bank and put all your money there. No. Try to what we call diversify. Have a fraction of it on the stock market, have a fraction of it on the what do we call them, the cash or cash equivalents, that's the MMF and what have you, so that at least you can have what we call a healthy combination. Some of your cash capital preservation is assured, because stocks do not assure you capital preservation. And then on the other side, at least your capital preservation is actually out there. It's a low risk. So the point here is not about getting all your money from this to the other. No, this is a question of a baby boy, baby girl. Both are important, all right? So it's not a question of, hey, this true, there are likeliness of you making more money into the stock market or from the stock market compared to the capital market, but does not mean we should run away from that. Just go get your 10%, get your 5%, your 9% that you're having, obviously not 5%, your 7%, your 8% on the capital market. Then on the other side, get yourself some dividends and get yourself some capital gains and what have you. I believe that would be a very healthy combination, and that would be an investment whereby I can say, hey, you know what, that is a decent one, and obviously you can go ahead and do something. Yes, that is it, guys. Just like I said, if you're watching me for the first time, hit that subscription button, like the video, and leave a comment on the comment section. For now, it's a goodbye and see you in the next one.